Anyone with a smartphone now has a Wall Street trading desk in their pocket. Real-time data feeds and complex algorithmic tools are entirely free. Yet, despite having total access to the exact same information flow as the professionals, the vast majority of individual retail investors consistently underperform a basic, unmanaged index fund. The market acts as a highly efficient wealth transfer mechanism. When individual retail traders lose capital, those funds do not vanish. They are systematically absorbed by institutional players, often called smart money. It's easy to assume institutions win because they have faster fiber optic connections or secret insider knowledge, but the data points somewhere else entirely. To understand why this capital continues to migrate toward the professionals, we must look past spreadsheets and examine the biological hardware driving every trading decision. Imagine a standard trading week. Volatility spikes, and a widely held asset drops 10% in value over a matter of hours. This bar chart illustrates a biological quirk known as loss aversion. Notice how a baseline financial gain registers as 1 unit of positive emotion, but an equivalent financial loss drags the emotional scale down 2 full units. Humans are hardwired to feel the pain of losing money twice as intensely as the joy of making it. As the asset value drops on the line graph, that intense emotional friction overwhelms the average retail investor's logic. This results in a panic sell, executed precisely at the lowest point of the market dip. Smart money operations view this exact same 10% drop differently. Through emotional detachment, they read the drop mathematically as a mispriced discount, stepping in to buy the shares retail traders just abandoned. The exact opposite reaction occurs during a bull run, where an asset's price begins to skyrocket exponentially. Watching the price climb triggers herd mentality. Average investors assume there is safety in the crowd and buy into the asset at its absolute peak to avoid missing out on the profit. Institutional players measure that same public euphoria and use it as a contrarian indicator. When the crowd rushes in, the institutions take their profits and exit their positions. Market stimuli remain neutral. The differing psychological filters alone determine who profits and who loses in these swings. Inside a professional financial firm, capital allocation is governed strictly by mathematics and predefined rules, completely divorced from feeling. Professional traders do not possess supernatural willpower. They feel the exact same biological fear and greed as an amateur trading from their living room. Their edge comes from utilizing psychological architectures, rigid, pre-built rules designed specifically to bypass human biological flaws. This logic diagram demonstrates how the architecture functions mechanically. When a chaotic event, like a sudden market drop, occurs, the system routes directly to an execute buy command. It intentionally bypasses the tangled node of human emotional choice. By setting strict entry and exit parameters before a single dollar is put at risk, the system neutralizes the primate brain's urge to react. The decision is locked in long before the stress arrives. Professional discipline relies on structural irrelevance. When a system dictates the action, the investor's emotional state at the time of execution becomes a non-factor. The next time you open your portfolio to review your holdings, you face a choice in how you approach your capital. The smart money label describes a psychological operating system rather than a specific zip code or net worth. Anyone can adopt these protocols to change how they interact with risk. True financial literacy requires predicting your own emotional failures just as accurately as you analyze a company's balance sheet. Stop trying to predict what the market will do next. Start building strict frameworks to control what you will do next. The mastery of capital remains impossible without first mastering the architecture of the mind.